Not every big tech is winning this quarter. We're seeing Meta and Microsoft get punished. Why are they dropping? Well, because Wall Street wanted to see a better ROI, a return on investment, on all that AI CapEx spending. What does that mean? It means Wall Street doesn't just want flashy announcements, they want proof. They wanted to see even a small increase in revenue, something that shows those billions spent on AI are actually paying off and setting up profits into 2026. But Meta and Microsoft didn't really show that, so investors are locking in gains. They're cashing out before year-end, reducing risk, selling into strength, and honestly, that's not surprising. So yeah, not every big tech is winning, but a few are absolutely crushing it. Google's been unstoppable, and tonight, all eyes are on Amazon's earnings. Now, let's break down what exactly Wall Street wants to see from Amazon, and I'll take you through the charts to show you those key lines in the sand, what I call triggers. You might ask, what's a trigger? Well, it's basically the if-then scenario of the market. If price breaks above a certain level, then that's your green light, your next target. Why does it matter? Because that level is resistance, and once sellers give up, the fight moves higher. So tonight, I'm going to show you Amazon's key triggers and what traders are watching most closely. We've been in a pretty volatile market lately. Let's be honest, October's been decent overall, but it's been a lot tougher than July, August, and September. Back in those months, it felt like you could throw a dart at the S500, the QQQ, or the Nasdaq, put in some money, and it just multiplied. Those were the easy days. But now we're seeing volatility, we're seeing distribution. And no, that doesn't mean the bull run is over. A typical bull run lasts about 5 years and climbs roughly 200%, and this AI-driven cycle we're in right now, we're only 3 years into it. 80% up overall so far, maybe closer to 90 or even 100 after the latest rally. We could still be only halfway through this move. That said, we're going to get pullbacks. We're going to get stress tests. The bears aren't just going to let the bulls run forever. Even though Nvidia's market cap hitting $5 trillion makes it feel like they might. I've said it before. Back when Nvidia dropped into the 170s earlier this year, I said it would hit 200, and it did. It turned into a race between Nvidia and Palantir to see who'd get there first. Nvidia won that race. Palantir got close, pulled back a bit, but Nvidia's made it clear. It's the top AI dog right now. Now we've got Nvidia's earnings coming up, and if there's going to be any bearish pivot, that's probably where it'll happen. Nvidia could either push this rally into year-end, or Wall Street could take some profits and cool things off. Either way, there's opportunity. Don't walk away. Don't get trapped at the top, and don't be afraid to take profits, just like Wall Street did with Meta and Microsoft. Are those companies done? No, they're just taking a breather. That's why we study charts, to find support and know when to reload. Now let's talk about Amazon, because its earnings are right around the corner, and this stock's been under pressure all year. A lot of traders see Amazon as the cheapest big tech stock right now. If they can show stable or growing profits through AWS, Wall Street's going to go crazy. This could be a major breakout moment. But bulls, take a breath. Don't get carried away. We've got to follow the charts. This is all going to come down to AWS, to the AI story, and to profit margins. Google proved it could do it. Meta didn't. Microsoft hasn't shown it yet, not in the short term. At least, if Amazon can prove they're using AI to boost profits, both in cloud and e-commerce, then we could see a real blowout to the upside. But again, stay calm. Let's look at the charts. I've marked a few key levels. Remember, we trade on 4 things: trend, structure, momentum, and volume. Right now, the trend is neutral. Amazon's been moving sideways all year, still below its July highs, basically consolidating after that big run earlier. The setup I see is a bullish descending channel, which often breaks upward. We're also seeing a series of higher lows. That's a good sign. And there's a possible inverse head and shoulders pattern forming, a strong bullish signal if it plays out. Now the neckline sits around 224. That's the middle of the channel. Above that, the bulls control the game. Below that, the bears take over. If Amazon loses 224, we're heading back toward 210. Simple as that. If 224 breaks, prepare for 210. But if we break above 227.8, then we're likely testing 232 to 236. That's your next resistance zone. If we break through 236 with strong earnings, our target becomes 252. How do we get that number? By projecting the neckline height from the breakout point. Momentum-wise, the MACD just gave us half a buy signal. The blue line crossed above zero. If the orange line follows, that's a full confirmation. RSI is above 50, meaning momentum's on the bull side right now. Look, I know some people don't care about charts. They just want to know, do you like it? Are you buying? Are you adding? Yeah, I like it. I added when it broke 224. If you took profits around 232, great. It pulled back, bounced, and now we're at a key level again. Personally, I'm not a fan of short-term options going into earnings. Implied volatility makes them way too expensive. I prefer long-term leaps. So even if the stock dips after earnings, you've got time for it to recover. That's the smarter, patient play. So that's my breakdown for today. Hope it helps you see the logic behind the market, not just the hype. I'll be back soon with new charts. We'll talk Nokia, maybe PayPal. And trust me, there's something interesting going on there too. Don't forget to like and subscribe. And as always, stay rational. Trade with logic. And I'll see you in the next one.